Have you ever really thought about what it would take to build a truly borderless digital economy? I mean, how
Yeah.
do you simplify currency across all these different nations and get around all the friction of traditional banking?
Yeah, it's a massive challenge, isn't it? Our current financial systems, well, they're powerful, sure, but they definitely create hurdles when you're talking about truly global reach and, instant value exchange.
Absolutely. And that's really why today we're doing a deep dive into OnPassive credits. This is their internal digital currency system that's designed to power their whole ecosystem.
Mm-hmm.
Our mission today really is to unpack what these credits actually are, understand why a company like OnPassive would even create its own currency,
Right.
how they function day to day, and what advantages they might have over just using regular money. We'll look at commissions, their role in the whole OnPassive ecosystem, the OES, and where they see this going globally.
Sound good.
Sounds great. Let's get into it.
Okay, so maybe starting at the beginning. At the most basic level, what are on-passive credits? Okay, so on-passive credits are basically the internal units of value. They fuel the entire on-passive ecosystem. You can think of them as the platform's own digital money, operating completely inside their system. It's 100% digital.
So it's kind of like the OnPassive dollar then, a dedicated way to exchange value just within their world.
That's a pretty good analogy, yeah.
Yeah.
Users can use these credits to buy products, upgrade their services, transfer value between users, and even earn through commissions, all directly on the platform. What's really interesting is how it's designed to be this complete self-contained financial loop.
Okay, that brings up a big question, though. Why bother? Why create an internal currency? What problems did traditional banking cause that made this seem necessary for them?
Well, the main driver seems to be this vision they have for a truly borderless digital ecosystem.
Yeah.
Relying on traditional banks can really limit who can participate globally, especially for people in emerging markets, right? Access might be tricky or expensive or just slow. Credits are meant to sort of level the playing field for everybody, no matter where they are.
And it's not just about access. It sounds like efficiency was a big goal, too.
Exactly. Credits mean instant peer-to-peer transfers right there on the platform. So you skip the bank delays entirely. You don't need currency conversions. You avoid those fees. It just makes the whole value transfer process much, much smoother.
Okay, so let's talk practicalities. How do these credits actually work? For example, if a founder earns a commission, what happens next?
Right, so commissions earned, they're first paid out directly in on-end passive credits. Then the user has options. They can use those credits to buy specific on-passive products like OConnect, their video tool, or ODomain for websites, or they could use them to upgrade to premium packages for different tools.
What about getting it out? Can users turn those credits into, actual cash in their bank account?
Yes, that's an option. The system lets you convert credits to traditional currency through their O-wallet, that's OnPassive's digital wallet. But that process does depend on completing Know Your Customer KYC procedures. That's pretty standard identity verification stuff for financial things. And of course, it's subject to their platform policies, mainly for security and compliance.
Okay. Now, stability is always a hot topic with digital currencies. How do credits handle things like, say, fluctuating exchange rates?
That's actually a key benefit they highlight. By pricing everything in credits, OnPassive creates this kind of universal value within their ecosystem. It means the price isn't directly hit by local inflation or, the ups and downs of external currencies. If something costs 50 credits, it costs 50 credits everywhere inside OnPassive, regardless of what the dollar or the euro is doing outside.
So let's clarify something I've heard. People often say one credit equals one USD. But you're saying it's not actually a dollar. Can you explain that difference?
Yeah, that's a really important point, and it does cause some confusion sometimes. While one credit might be pegged or referenced to the value of one USD, mostly for pricing consistency, it's absolutely not a dollar itself. Think of it more like maybe airline miles or a store gift card, or even in-game currency. It has a clear value linked to a real-world currency, but it only functions as an internal token, strictly inside the on-passive ecosystem. It's really a closed-loop system. That USD reference is just a benchmark, a convenient way to price things until you decide to convert it out through their approved process.
Okay, that makes sense. So for the user, what are the real practical upsides of using credits instead of just, say, using a credit card or doing a bank transfer within the system?
The advantages are pretty significant, actually. First off, speed and simplicity. Big ones. There's no waiting around for bank approvals. You skip things like SWIFT fees for international stuff. And transactions happen pretty much in real time. It cuts through a lot of the usual financial red tape.
Right. And with all this digital movement of value, security must be top of mind. How are credits secured?
Absolutely critical. They state that every single transaction using credits gets recorded on OnPassive's own secure ledger. Plus, they integrate their O-Verify system. That's their identity verification tool, which helps minimize fraud risk, adds a big layer of trust.
Hmm. Okay. One thing that caught my eye was this idea of financial flexibility. Something about accumulating credits, potentially avoiding immediate tax issues. What's the thinking there?
That's an interesting aspect, yeah. And it really depends heavily on the tax laws in the user's specific country, so that's a big caveat. But the idea is potentially users could accumulate credits and reinvest them within the ecosystem without that immediately triggering a taxable event, which might happen if you withdrew regular currency. It offers some flexibility. And strategically for OnPassive, it encourages users to keep value inside the platform, right? Helps grow the internal economy and makes them less reliant on constant external financial interactions. Keeps the economic engine running internally.
That clarity, that efficiency, seems like it extends right into how founders get paid too. Let's talk more about how credits fit into the commission system.
Sure. So commissions, they're calculated based on a dollar value, but the actual payout is always in on-passive credits. These go straight into the user's O-wallet, and then the user gets choices. They can start a withdrawal process to get traditional money. They can use the credits to buy more tools or services right there in the ecosystem, or they could even gift credits to another founder within the system.
So this isn't just a payment mechanism. It sounds like it fundamentally shapes their whole economic model. It encourages this self-sustaining economy inside on passive. What does that mean for their goal of being sort of independent in the market?
That's a really good way to put it. This system is key to making OnPassive economically self-sufficient. By keeping the value circulating internally, like you said, they reduce their need to constantly deal with external currency exchanges. It streamlines things for them, strengthens their internal economy. It helps them build this robust, independent ecosystem that's maybe less vulnerable to shocks in the wider market.
And looking at the whole on-passive ecosystem, the OES, how are credits used there?
Yeah.
Are they the standard price tag for everything?
Pretty much, yeah. All the products within the OES, whether it's OConnect, OTracker for website analytics, different subscriptions, they're all priced explicitly in credits. This gives users a single unified way to spend. If you need a traffic package or something from their marketplace, you use your credits. You generally don't need to step outside the ecosystem for these transactions.
Makes sense. Very efficient. Now, can founders earn credits passively? Is there a way to build up credits without just buying things or making direct sales yourself?
Oh, yes, absolutely. The compensation model is designed for that too. Founders can earn passive credits in a few ways. Things like daily traffic flow sharing, commissions based on their team's activity, getting into leadership pools and direct referrals, all these different ways people earn. The compensation comes as credits. It's designed to encourage engagement and, long-term growth within the ecosystem itself, rewarding people who help it expand and stay stable.
Okay, let's look ahead now. On Passive talks about having founders in, over 200 countries. How do credits help them actually manage that kind of global scale?
Well, it simplifies things massively. It basically creates one single global currency for all their founders. Doesn't matter if you're in Kenya, India, Canada. Everyone operates with the same credit value. This just cuts out all the currency confusion, makes value exchange way easier across borders. It's a direct way around a lot of the usual headaches of global commerce.
And beyond just making things simpler, what about tech upgrades? Where could credits go in the future? Could they integrate with, say, crypto or other digital finance trends?
There's definitely potential there. As OnPassive grows, you could see credits getting enhanced with things like smart contracts, maybe programmable payouts for certain things. The O-wallet itself could potentially become interoperable with both regular fiat accounts and maybe even crypto wallets down the line. That would massively boost flexibility. Imagine using credits seamlessly for Oh Bless donations, that's their charity thing, or shopping on their Omart platform.
And thinking even bigger picture, long term.
Yeah.
What are the really ambitious goals for credits? Could they ever, break out of the ecosystem, become more liquid?
The vision seems pretty ambitious, yeah. They talk about credits becoming the main way to trade in the on-passive marketplace for donations, shopping, maybe even offline services eventually. And looking way down the road, there's the possibility they could function more like blockchain tokens, with greater liquidity, maybe even someday being listed on open exchanges. But that seems like a longer-term aspiration.
Gotcha. So even right now, before all those future possibilities, what's the impact credits are having today on global payments?
Well, even in their current setup, they are making a difference for their users. They're offering speed, giving users more control, and bringing more people into the digital economy, that inclusivity point. They're really helping solidify OnPassive's claim of being a complete economic ecosystem. It shows a practical alternative to traditional finance for their global user base.
So wrapping this up, what does this all mean for you, the listener? It seems clear that on-passive credits aim to be more than just digital money. They represent confidence, control, connection, all within this borderless digital space they were building.
Mm-hmm.
And it really makes you think, doesn't it? What does this model, this idea of an internal platform-specific digital currency, what does it mean for the future of global commerce? Could it reshape how we even think about money and value as the world gets more connected? And you have to wonder, how might other platforms adopt or adapt something similar to tackle their own challenges? Lots to consider there.
Passive technologies, specifically their whole idea around AI traffic commissions.
Yeah, this one's interesting. It's not just your standard online marketing talk. It definitely brings up some big questions about automation, maybe even wealth.
Right. And we're basing this on a pretty extensive, 100-minute conversation.
That's right. We listened to OnPassive's founder, Ash Mufareh, talking with affiliates, educators, tech analysts from around the globe.
And they were focused entirely on how this system is structured, what impact they claim it has.
So our goal here, for you listening, is to really unpack how OnPassive says it uses AI for traffic, how the commissions supposedly work,
And what that might mean for what they call financial freedom. We want to break down how this AI traffic is supposed to find customers and automate earnings so you get the picture quickly.
Let's jump in.
Okay, let's get into it. We all kind of know the usual online grind, right? Finding leads, boosting clicks, hoping people buy something.
Yeah, the constant hustle.
But Ash Mufareh talks about something different. A system delivering, quote, targeted, guaranteed traffic and sharing commissions, even if you never talk to a customer. Now, we hear new paradigm a lot in tech.
All the time.
So beyond just saying automation, what makes this on-passive AI traffic actually different? Structurally, technologically, is it really distinct from, say, big lead gen services or affiliate networks? What is this AI traffic, particularly for these founder links?
Okay, good question. So Ash explains it as their own proprietary AI.
Yeah.
It analyzes massive amounts of user behavior in real time.
Real-time data. Yep.
Yeah, and it geolocates where interest is popping up. Then it automatically directs real potential customers they stress, not bots, to these founder links.
And founder links are just referral URLs for their early members.
Essentially, yes. For the early adopters, the founders. And Mike Ellis, one of the affiliates in the discussion, really hammered this point. Unlike normal affiliate stuff where you go find traffic,
Right, you're doing the work.
OnPassive claims it drives the traffic to you. And when you ask about the AI analysis, Ash mentioned they developed their own deep learning models. They feed it huge amounts of browsing, search, social data.
So it's trying to predict who's likely to buy, more than just, say, age and location.
Exactly. Recognizing subtle patterns, predicting conversion likelihood, that's the claim high-intent traffic. And then the system follows up. Automated chats, emails, funnels, nurturing those leads automatically.
So for you listening, think about that shift, moving from always chasing customers to a system where traffic is theoretically brought right to your digital doorstep. That does change the dynamic, doesn't it?
It's a fundamental shift in the model, if it works as described. Yeah.
Okay, that promise, targeted, guaranteed traffic, passive commissions, it sounds great. Almost too great, maybe, in a world full of online hype.
You got to be skeptical.
Right. What's actually in place to guarantee the quality, the conversions? And once traffic does hit, how do the commissions actually get paid out? How do they separate this from, the less credible schemes out there?
Yeah, absolutely critical. Ash went into the commission blueprint. It's layered. So any visitor converting through your link could be a free sign-up, a trial, a paid subscription that triggers a commission.
Okay, any conversion counts.
Right. And it happens on 3 levels. Commissions from people you directly refer.
Standard affiliate stuff.
Then commissions from their referral, so a second tier. And then this 80 spillover thing, which is pretty unique.
AI spillover, what's that?
It's where the system apparently assigns random, unattached traffic directly to founder or qualifying affiliate accounts. Sarah, another participant, confirmed their internal platform, the OES 2.0 system.
The on-passive ecosystem platform.
Right. She said it tracks everything automatically.
Yep.
So it doesn't matter where the traffic came from, direct, spillover, whatever. If it lands under your ID and converts, You get a percentage.
And they claim this tracking and spillover makes it sustainable, prevents it from being top-heavy.
That's the argument, that the automation and the spillover are designed to distribute opportunities more fairly, keep it viable long-term, addresses that common concern with multi-level systems.
That structure, especially the spillover, sounds incredibly streamlined for passive income. Maybe too streamlined. Do we have actual examples? Does it really work? Like, set it and forget it?
You're right to ask, does it really work passively?
Yeah, or is there fine print, hidden requirements?
Well, Emmanuel Naunjam, he shared a pretty specific story from the beta testing phase.
Okay, what did he say?
He said he received 186 traffic leads directly from the system, and out of those, 42 converted into actual customers.
42 conversions. Okay, and the result?
Resulted in $900 in commissions. And his quote was, "without lifting a finger."
Without lifting a finger. That's a strong claim.
It is. Joyce Lin, another person in the discussion, jumped on that, saying that's the power of the AI spillover. It fills the pipeline even for people who aren't natural marketers.
So it helps the non-salesy types.
That's the idea. And Mike Ellis added a crucial point. These aren't just one-off leads. They often become active users who renew monthly.
Ah, so recurring commissions, that builds up.
Exactly. Now, that phrase, "without lifting a finger," it's powerful, but we should probably clarify, it likely refers to the active selling part.
Right, not like you do literally nothing.
You still need to activate your account, probably monitor things. They mentioned studying your analytics is key to actually maximizing the potential. So maybe without active selling is more precise.
Okay, that makes sense. Still, Emmanuel's $900. It makes you wonder about traditional sales jobs, doesn't it? What does that level of automation mean for how people might earn money?
It's a big question.
And if one person gets $900 kind of passively, what happens if this scales? Thousands, millions of users. What's the bigger economic picture on passive paints? How do earnings compound?
Dr. Raj Patel, an economist involved, gave a breakdown. He sketched out a scenario. Say a user earns $25 per conversion,
Okay.
and the system sends them just 10 conversions a day. That's $250 a day.
Or $7,500 a month, just from the traffic.
Exactly, solely from the AI-driven traffic in his example. And Ash Mufareh himself projected much higher numbers down the line.
Like what?
He suggested some founders might see 100, maybe more, conversions daily once everything's fully automated and their global marketing ramps up.
Wow, okay. That's significant scale.
And Sarah added another layer. Top founders, she said, might have like 10,000 users downstream in their network.
So the traffic gets distributed through that network.
Yeah, building team commissions. It creates this massive potential scale, of course, these projections.
They rely on the system working flawlessly, finding enough converting customers continuously.
Precisely. The consistency depends on ongoing optimization, market reach. The compounding comes from those recurring subscriptions and the network effect you mentioned.
It definitely encourages you, the listener, to think about that compounding effect, the long view. But it brings up a really basic question.
Where's all the traffic coming from?
Exactly. It can't just appear out of thin air. There needs to be a real engine driving this.
No magic button, right? The source material laid out several channels. It's a multi-pronged thing.
Okay, like what?
Paid traffic, so global advertising campaigns, organic search optimization, SEO, AI-generated funnel campaigns.
They use AI to build the marketing campaigns, too.
Apparently. Plus social media outreach powered by their own platform, ONET.
ONET, that's their private social network.
Yeah, and even internal traffic from people using other ONPASSIVE products. Joyce Lin called it smart traffic.
Smart traffic, meaning?
Meaning, the AI supposedly knows who's likely interested in what specific product and sends them to the right person's referral ID.